How to get rich from the 2023 recession. If you know what you're doing, after all, there's a popular saying that riches are made in recessions, and it doesn't take much to realize that we're already beginning to move towards that point. Just take a look at the headlines today. Now, even though this sounds negative, the fact is recessions happen on a regular basis, and if used correctly, it's possible to set yourself up for the rest of your life through some incredible opportunities and discounts, with even Warren Buffett being quoted as saying, "Bad news is an investor's best friend." So let's talk about exactly what's expected to happen throughout these next 12 to 24 months. So let's deep dive and first answer this. What happens in a recession? Rise in unemployment, a drop in wages, loss in consumer confidence, the decline in values across everything from stocks, food, energy, and services. The recession also triggers a decline in earnings. See every quarter companies report the revenue and give guidance on their future outlook. But lately they've been cutting forecasts, bracing for slow or even negative growth, inciting recession. Mass tech layoffs. As Bank of America explains, the U.S. economy will soon start losing 175,000 jobs per month. So how to make money and what to do with your investment in 2023? As of now, all three major indexes are down between 20 and 30%. Analysts like JP Morgan believe that we have another 20% to go from current levels. However, if we take a look throughout history, since 1946, the average bear market drop was close to 30%. The most severe having been in 2009, when the S&P 500 fell 57% from its peak. During the recession, bear markets tend to do even worse, with an average drop of 34.8%. As of today, we're down about 25%. All of that is to say that generally, the absolute bottom occurs when we see capitulation among investors. Usually, that's a time of the start of the recovery and things begin to bounce back now. What about real estate? Even though every area is different, and some locations might continue to flourish, housing declines on a national level are actually incredibly rare. In fact, as you can see throughout the last 60 years, there have only been a few times when prices meaningfully fell more than 10%. But now the general Wall Street consensus is that national housing prices are going to decline 7%, with a worst-case decline of 10 to 15%. Should interest rates continue to increase, of course, every market is going to be different. And according to Moody's Analytics, the most vulnerable markets could see upwards of a 25% decline from the peak. This includes parts of Florida, Arizona, Idaho, and Southern California, with the decline lasting another 12 to 18 months before bottoming out. Now, in the big picture, it's probably not going to make that big of a difference for anybody with a fixed-rate mortgage who intends to stay in their property for another 5 to 10 years. But for anyone looking to invest or buy a house, we may begin to see some deals starting to come on the market. Let's talk about cash. Clearly, up until now, there's been this mindset that cash is wasting away to inflation. But when every other asset is falling in price, sometimes cash could be the safest place to store your wealth. And you know that's significant when someone like the billionaire Ray Dalio admits that cash is no longer trash. The truth is, many people forget that as recently as 2018, cash was the best performing asset. And if you had just been saving your money in a high-yield saving account, you would have far outpaced the market. Cash is now becoming such a significant part of the portfolio that even fund managers are holding on to the highest amount of cash since 2001. Citigroup said that cash is the only asset that investors could use as a recession hedge. But if you truly want to get rich, you should take advantage of this hard-earned cash. That brings us back to the start. Should you buy stocks and start investing? Even though a person might think this is a bad time to invest when everything is falling, 30% of wealthy people would see this as an opportunity to be able to buy those exact same companies. Warren Buffett really had the perfect analogy for this. He said, "When hamburgers go down in price, we sing. When hamburgers go up in price, we weep." For most people, it's the same thing with everything in life. They're buying everything except for stocks. When stocks go down, people don't like them anymore. So first, reframe your belief, because a falling market could work to your advantage. The second, there's less competition. The fact is when times are difficult, companies scale back and they play it safe. But this opens the door for smaller, more aggressive companies to stand out and take their place. For example, one study across 16,000 companies found that those who continued to advertise increased their value and got more bang for the buck with positive growth years after the recession. Patrick David made a fantastic comparison a few months ago that the peak of the market cycle is exactly like a forest. This means that only the largest, most established trees or companies get access to all the resources, or in this case, sunlight. Everything at the bottom has a difficult time being able to compete, and it's hard to grow. Just like natural forest fires, our economy has a way of repeatedly clearing out and bankrupting the companies that no longer are able to sustain themselves, giving opportunities for newer, smaller businesses to continue to develop. After every bear market comes a bull market, as Yahoo Finance points out. Historically, the S&P 500 has fallen an average of 29% around a recession, with a median drop of 24%, but once stocks have found their low, their average return the following year is 40%. Within the next 2 years, the market increased by an average of 58%. This means that investing on the way down is much more profitable than pulling out of the market. How to know if we are in a recession? No one will call it officially, you need to feel it. For example, the Great Recession that began in December of 2007 was not officially announced until December 2008, only a few months before it officially ended. Another example is the recession that began in March of 2001, but they didn't call it a recession until November later that year, and this continues with about a 6 to 12-month delay until we actually know we are in a confirmed recession. The recession in 2023 will give you opportunities to make money and save money, regardless of inflation. How to fight against higher prices and how to avoid classic mistakes in this economy is coming up. With a bit of preparation and a smart financial plan, the 2023 recession will be something you can quickly get through. Where did inflation come from? The precursor to the modern consumer price index that we base the inflation numbers on were published in 1919, and it was an average of 32 industrial areas. An index for the United States was picked up in 1921. Monetary policy is a major cause of the increase in inflation. That means that when inflation rises, the Federal Reserve sets too low of an interest rate with the growth of money, and supply increases too rapidly. With that comes an inflation stimulus. Current inflation makes it harder for you to buy stuff. Christmas gifts are more expensive this year than they were last year. The average price of a dozen eggs in 2010 was $1, and in 2020 it were $1.51. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.